Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Mark Connors. He's head of research at 3IQ Digital Assets. Mark, it's great to have you with us in studio. Welcome to Trade Talks.
Thanks for having me.
And you think this is October 2008 for crypto. We all remember what happened in 2008, 2009. What do you mean by that?
So it means it's not March when Bear Stearns went under. It's not September when Lehman went under. We're already through a bunch of the roundup of over-leveraged entities that also had asset liability mismatches. We know that Lehman was front-loaded with overnight funds they couldn't refinance. People walked away, and that's why they had to file. So we have some folks that had some asset liability mismatches in crypto, and we're seeing those unwind right now. So they had expectations, they didn't bear out, they had an asset liability mismatch, and the market's pretty good at winding that up.
Let's talk about Bitcoin specifically. Do you see up or downside from here? And is this more of a systemic issue and we haven't seen the last of it?
All right, so I love the systemic issue. Let's start there. You know, is there a problem with the patient? And from Bitcoin, we say that this '08 was about the plumbing, just like '08 was. It was about what's going on with the pipes and plumbing. Are people able to finance? And no, the plumbing was an issue, but the protocol, the assets like Bitcoin are performing. They're still printing every 10 minutes. They're still performing. So what we think here is this is a pullback. If you look at, when you have something like this happening, we call it technical, which we assert is potentially temporary because you have an actor that is selling uneconomically. They're forced to sell. When that abates, we think that Bitcoin, the potential for Bitcoin to move off its 200-week moving average, which it's only breached twice in its 13-year history. We call it like a beach ball underwater. We think that when this storm passes, that Bitcoin will reassert its path higher. So that's what the data supports, and that's what we put out in our report.
And regulation is potentially coming this year, at least a little bit more of a framework around it with the CFTC being tasked with that versus the SEC. Is that good or bad for Bitcoin in the space in general?
So for Bitcoin in particular, Gary Gensler said this week, I think it was earlier this week, that Bitcoin is not a security, it's an asset. So that was the first time I believe he's ever made that distinction. But more importantly and broadly for crypto, the language in the Loomis-Gillibrand bill, which came out just this month, I mean, no one's even really talked about it because of all the volatility. The language in there is pretty constructive and clear that they want to regulate it, they want it for innovation. They use the word responsibility 7 times in all the headings, responsibly innovate. And then additionally, I think that the incentive structures for the Treasury and crypto, it may not make sense, are aligned. Because in the legislation, or the proposed legislation, it says that all stablecoins have to be regulated. They have to be deposit-taking institutions, so that's under the regulation of the banking code, and they have to use treasuries. So in a stroke of a pen, the treasuries created new buyers of their securities just when all the foreign holders are selling. So I think this is absolutely constructive for the entire ecosystem, and stable coins are going to lead. That's the first asset I think they're going to legislate.
You had mentioned that it would be an asset, not a security. What's the significance of that?
Well, in addition, it's also a medium of exchange for a certain amount. So the idea there is that as an asset, it is taxed as such. Mm-hmm. It means that as a security, it doesn't have the same 40 Act restrictions that an asset does. So it's cleaner from a holder standpoint. Right. So that's the main. Now, how other tokens, given that the language is pretty heavy CFTC and they're pushing for that, we'll see if that also holds for Ethereum and others.
All right, Mark, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.